Welcome to the Open eCry market commentary for the week of May 21st. My name is Toby Gennaro, and I'll be talking through some of the outlooks for the upcoming week on the various indices and some commodities. So let's take a look at some of the U.S. indices here. We're looking at the ES, so we'll start out with the S&P 500 and look at some of the higher time frames like the weekly, the daily, and then try to get some idea of where the market's heading here in the next week. Looking at, we just broke through this level last week, this 1340 level, and we've got some good extension down from the moving averages. So it would be natural here to get a snapback back up into some of these levels. There's a level here right around 1310, another level up here around 1320. That'll show you on some of the lower time frames. So it wouldn't be out of the question to have a relief rally this week. We've had basically 3 straight weeks of a lot of downward pressure on that news out of Europe, Greece potentially exiting the Euro Union. So a lot of things like that. It's very difficult to predict where the market is going to go. But since a lot of those moves are going to be fundamental based on whatever that news is coming out of Europe, but we can look at what the technical setups are. We can look short term at where the key levels are and where some of the buying and selling orders are going to be accumulating. And so that's what we'll be trying to do here for the upcoming week. So definitely overextended on the weekly chart. Again, we've been overextended for quite some time on the daily chart, really looking for a move and a pullback, up into the moving averages. We can see some resistance setting up right here around these levels, even at 1327, 1335, again up around 1340, and then that major level up around 1350. So as we move down to some of the other lower time frames, we had this consolidation for a while back, then we had just a straight move down. We're getting a pullback on the 480 chart. We're not quite back up into the moving averages, but we're in and around that 10-20 period moving average. On the 240, we're actually right back up in there. So you want to be paying attention for those small bearish candles in the sell zone. Looking at some of the support and resistance levels here. Again, that 1340 level is going to be significant. You've got a level right down here at 1320, which is a little closer. And then you have that high right in there at around 1310, which we're kind of flirting with right now. So if we can get above 1310, looks like we'll be moving to that 1320 level. And then you can start to look at a Fibonacci retracement that might overlap with that pretty nicely. If we do this, all of a sudden we get that 1324 level comes right in with some of that resistance right there, and there more than likely going to be some shorts accumulating there, so you might see a pullback right around that 1320, 1325 level, which would be pretty reasonable. So we'd get a pullback then. You'd be looking a pullback, right back into the sell zone on the 480 chart, and then you'd be right back almost to the 10-period moving average on the daily chart. So just some levels there to keep in mind on the S&P. The full retracement level, as we've been talking about for the last couple of weeks, would be right back to that key level of 12. Right here at about 1272 is where some of that support comes in, and then we get essentially a 50 or basically a 62% retracement all the way back to that 1276 level. There's some support down around here at 1309, but we've pretty much blown through that and gone all the way down to 1286, 1287. So to come back down and retest that 1270 level would be reasonable. So again, looking for to follow this trend, looking to stay on the short side. And then again, looking to keep an eye on some of the news that comes out of Greece that might provide a fundamental move, either higher or lower. And so we don't want to try to predict that, but we just want to be aware of it and then help us to better understand what side of the market to be on and look for the reaction to the news. Very similar scenario here on the YM, looking at, again, some of the major 30 American businesses on the Dow, and looking at some similar things here on the weekly chart. Again, a lot of extension down on the weekly chart. Again, we have 3 consecutive weeks of a down move. Looks like we're going to get a little bit of a relief rally, potentially back up into this 565 level, maybe a little higher into that 650 level would be possible. Again, a lot of overextension on the moving averages. Charts are looking very similar to the ES, even on the Fibonacci retracement here, looking at the total move that we might be anticipating. Very similar, that 12,000 level that we've been talking about for the last couple of weeks. We haven't gotten there yet on the YM. The lowest has been around that 12,300 level. So again, looking to be short and follow some of these intermediate time frames on the 480, the 240, the daily chart. Looking for we're going to get some relief rallies back up into the moving averages, but again, at some of these levels, you're going to be met with some selling resistance and some selling pressure. So some of those levels, again, one, we would need to break this level right here at right around 12,480, and then the next level would be somewhere up here right around 12,560. And then going up, 630, and then some of these other levels right around here. And then you have that major level right up around 12,760. Okay, so in looking at some of these, we did a Fibonacci retracement from that most recent consolidation. Down here, we can see that move right back into that 12,600 level would be the 50% retracement, then right into that 650 level would be the 62% retracement. So keep an eye on some of those levels. Again, what we're looking for is a move back into the moving averages. Not there yet on the 480. We're getting there on the 240, and then looking for short setups on those trend flow trades. So we're looking for a bearish candle in the sell zone on some of these intermediate time frames, and then keeping an eye on getting back up to in and around that 10-period moving average within the sell zone on the daily chart is going to be what we're looking for. So that's a setup. Again, looking to go a little bit lower here on the indices for the week, and potentially expecting a relief rally, but looking for the setup and the shorts coming in to sell off that rally. On gold here, we're looking at the mini contract, the YG, and that's provided for you on the Nice Life Exchange. And for those of you that have been trading gold, long, extended, protracted uptrend in gold. Over the past year, we've had some of these major pullbacks on the weekly chart, and then quite a long, lengthy consolidation over the last 10 to 12 months, putting in this support level right around this 1550 level. We just got a bullish candle coming off of that level, so we're getting a little bit of a bounce. We break through the high of that candle, it looks like we're right there, ready to break through that. It looks like we're probably going to get a pullback, maybe right up here into the moving averages, and there's some resistance points here that you can look at up around 1625, and then some of these other levels up around almost that 1700 level. That would still put the market right in a trend line there, going lower, potentially to set up a maybe even a flat level here at that support level, and then to potentially break that to go lower. So we really want to be looking at some of these trend flow trades that are setting up. We have all the moving averages rolled over, at least the 10, 20, and the 50. On the daily chart, we have that solid resistance level at 1615. Looks like we're going to rally right up into that, which is right in and around that sell zone at the 10 and 20 period moving average. Coming down to the 480 chart, if we put in that Fibonacci retracement level from the most recent high down to the most recent low, we get that pullback and that rally now right back into the 50% level where we're right at today. And then it looks like if we moved a little bit higher, we'd get a perfect overlay with that 1615 level, which would be the 62% retracement. And I'd probably say that you'd see a lot of selling coming into the market at that point, and we might even get a retracement back down to retest the low and potentially put in either a bottoming structure here to move higher, or we might get a consolidation then at that support level, which would give us a signal that there may be a flat level break to go even lower than that 1650 level. So those are some of the key levels to look at on gold. That 1615 level, you want to keep an eye out. We're pretty close there, and then get your Fibonacci's in place, and then start looking on some of these trend flow setups. You can find a bearish candle. Looks like if we get a close out of this bearish candle on the daily chart, that would be a fairly good signal to get short up against that backstop of 1615. So that's what it looks like on gold. Similar chart pattern setting up here on silver. And again, we can see that support level right here at around 25, actually 26. What is it? Right around 26.5. And so for the last couple of weeks, we've been looking at that 31 level and taking some shorts off of there on that most recent move back. We had a nice flat level set up there, a break, and then a retest of that level. And then we had that run down all the way back to retest the low at right around 26.4, 26.5. So don't know if that level is going to be broken as of yet. We have a very bullish candle here. It looks like we might rally for a bit and then start to look for some of those trend flow candles back up in amongst the 10 and 20 period moving average here on the daily chart. And we also have a resistance level right here at around, again, that 29.30 level, and then obviously all the way up against that 31 level. Don't know if we're going to get up that high. But if we take a look at the 480 chart, get in a Fibonacci retracement very similar to gold, we're right there at that 50% level where we got some selling. So whether we're going to push higher and get back into that 62% level, which would put us into a nice resistance level right around 29.5, you'd probably see a lot of shorts coming in at that point. So again, looking to follow the strong trend here. We're going to get some rallies back up, but pay attention to some of these levels and some of these retracements, and that's where you're going to see some of the sell orders accumulating to take the market lower. So in the short term, looking toward the end of the week, that's what it looks like on silver. And that is the outlook for the week on the U.S. indices and some of the precious metals, gold and silver. And we'll look forward to speaking to you again next week on the Open Economic Market Commentary.